Turkey has quickly become a massive hub for international trade, drawing in companies eager to expand their global footprint across a rapidly growing consumer market. If you sell into that market, you will encounter the Recycling Contribution Fee, or RCF. It is a standard, well-intentioned environmental levy designed to fund waste management for products like electronics, batteries, and everyday packaging. When a company first enters the country, import volumes are usually small. During this initial honeymoon phase, an internal team can easily calculate the required fees using basic spreadsheets and manual physical weight checks at the warehouse. That initial simplicity is dangerous. Relying on manual data entry builds a false sense of security for an operation that is inherently designed to grow. The legal reality of the RCF often catches international teams off guard. Liability under Turkish law is determined by the physical reality of your supply chain, regardless of your exact corporate structure. Importing goods directly into the Turkish market immediately triggers this fee for your foreign entity, even if operating without a local branch. If the actual transfer of ownership happens inside the country, the legal responsibility shifts directly onto the local distributor. Tracking these specific points of ownership transfer takes time, but a small compliance team can manage the paperwork if they are only dealing with a few pallets of merchandise. The environmental fee itself is completely unavoidable. The actual hazard to your business is how quickly this mandatory calculation process fractures when those few pallets turn into hundreds of shipping containers. Eventually, your import volumes surge and product catalogs multiply, completely burying that initial spreadsheet system under thousands of new shipments. To stay compliant, someone has to manually map every single imported item into specific legally defined material categories like glass, plastic, metal, or composite. Then they have to isolate and track the exact physical weight or unit basis for every individual component making up those mapped products. Finally, they must cross-reference those specific weights and categories against official government tariff rates, which are updated every quarter. Multiply a catalog of 10,000 products by shifting material classifications, precise component weights, and changing quarterly tariffs. Human calculation mathematically ceases to be a routine administrative task and becomes an unsustainable operational hazard. This massive data load creates immediate internal friction. Logistics, accounting, and compliance teams often operate in completely separate software silos, generating conflicting records for the exact same shipments. Because the government mandates tight, non-negotiable quarterly deadlines for these declarations, teams are forced to rush their calculations, compounding those departmental data errors. As import volume scales over time, minor classification typos or slight data inconsistencies under Turkish environmental regulations escalate rapidly into major compliance failures. Once those errors reach regulators, companies face intense scrutiny, heavy administrative fines, and severe retroactive tax assessments for past miscalculations. At an enterprise scale, manual RCF calculation creates a direct material financial threat to the operation. For most growing companies, building an internal department to track these evolving regulations requires significant overhead. Transitioning to a managed RCF service leverages existing infrastructure to mitigate these risks. A managed compliance service connects directly to your existing enterprise resource planning software, completely eliminating the need for manual data entry on individual components. Dedicated environmental tax specialists also ensure that your entire product catalog remains perfectly aligned with Turkish legislation, applying the correct mapping and tariff rates exactly as the laws update. With centralized processing, the data from customs declarations automatically reconciles with your internal accounting records, erasing the friction between your logistics and finance teams. Systematically removing human error from high-volume data processing creates a stable compliance environment that can sustain itself as import volumes continue to rise. The recycling fee is actually one component of a much broader extended producer responsibility framework enforced throughout Turkey. By implementing a professionally managed, auditable RCF process, a multinational company generates the exact verified data needed to support their global environmental, social, and governance reporting strategies. The ultimate goal for any importer is to safely capture a larger share of the Turkish market without triggering regulatory roadblocks. In a highly scrutinized regulatory landscape, automating your environmental compliance is the foundational step that allows your supply chain to grow without the compounding costs of systemic reporting errors.